watching the Wealth Guard Show. I'm your host, Tom White. Well, the dollar continued its rally this week, and the commodities took another hit. 10-year Treasury yields, they headed lower as money was flowing into Treasuries and out of stocks. We'll talk about that and much more in our economic mechanics portion. First, we're going to start out with our IBD 50 portfolio. And the way this works, we started out on January 28th, 2011 with $10,000, and we picked 5 stocks from the IBD 50. Each week, the worst performing stock is sold and a new stock is added to the portfolio. We're going to take this portfolio to $1 million or bust. Let's see how we did. And our holdings going into this week, we had last week's winner, Polypore International, starting the week out $67.62. Altera Corp came in second place, $48.15 starting out the week. Tempur Pedic, that stock was slipping the past 2 weeks in a row after it won 3 weeks in a row first place spot. Starting the week here at $61.76. Paso Pipeline, the senior stock in the portfolio, acquired on February 11th. Starting the week out here, $36.17. And it's Edwards Lifescience, a new addition to the portfolio. Picked up 24 shares of that stock at $88.20. Got cash in the portfolio of $159.18. Total portfolio value, $11,929.69. One of these stocks, the worst performer, is about to get sold. Let's see how we did. And coming in first place this week, our number one performer, it's Tempur Pedic. And Tempur Pedic is back on track, opening the week here $61.76 and closing at $64.07. Total value added to the portfolio of $106.26. Let's take a look at the chart. Had a pretty good week with Tempur Pedic, but things may be cooling off here down below. Point 1 shows stochastics are in overbought territory. They're starting to lose a little bit of steam here, but they're still positive. We gave it a yellow mark. And above that, point 2 shows that the MACDs, they're still negative. They haven't given a bullish signal yet. And the histogram bars, they're below 0.2, but they are rising, so gave that one a yellow mark. Up top, point 3 shows relative strength index. Seems to be headed nowhere, flatlining, so we gave that one a yellow mark too. And coming in, number 2 this week, it's Altera Corp. And Altera Corp opened the week at $48.15 and closed the week $48.30. Only a $6.60 gain in the portfolio this week, but good enough for second place. Let's take a look at the chart. And the chart of Altera Corp, it looks like it's given up. Point 1 down below, the stochastics, they're bearish from overbought territory. Gave it a red mark. Point 2 above that shows that the MACDs, they're confirming the stochastics as the black line has crossed over the red and gave us a sell signal. Histogram bars too, the blue bars are below 0 and they're declining. Gave that one a red mark too. Up top, point 3 shows the relative strength index has been going sideways and it looks like it wants to break down a bit. Gave it a yellow mark. We're going to watch this one cautiously because I bet this one turns red in the early part of next week. And our number 3 performer this week, it's Edwards Lifesciences. And yeah, it's a new addition to the portfolio, opening the week at $88.20 and closing at $88.25. Only $1.20 added to the portfolio, but a gain nonetheless, and good enough for third place. Let's take a look at the chart. And the chart of Edwards Lifesciences down below, it looks like it's wanting to give up. Point 1, the stochastics are in overbought territory and they're beginning to turn down. Gave it a yellow mark. Point 2 above that shows that the MACDs, they're starting to level off a little bit, but it's the histogram bars that are dropping. Gave that one a yellow mark. Up top, point 3 shows that the relative strength index is starting to turn too. Has been trending higher. We gave this one a yellow mark too. Overall, better performer. You know what's going to happen to it. It's going to get sold. And that only leaves room for one more stock in this portfolio. One of the stocks is going to remain. The other is going to get sold. The first stock up, it's El Paso Pipeline, the senior stock in the portfolio, acquired February 11th. They were in the 4th spot last week, battled out and survived. This time they're battling it out against Polypore International. Polypore International has been in the portfolio now for about 3 weeks and has made us money. This time, finding himself in a bit of trouble and battling for survival. Coming in, number 4. And remaining in the portfolio, it's... Polypore International. Polypore International surviving the portfolio. Opened the week $67.62. Closed the week at $66.33. Total loss of the portfolio $51.60. Let's take a look at the chart. And Polypore's beginning to show some weakness here. Down below, 0.1, the stochastics are in overbought territory. Gave us a sell signal when the black line crossed over the red. Gave this one a red mark. 0.2 above that, the MACDs, they're starting to lose a little bit of steam there, and the histogram bars are falling too, so we gave that one a yellow mark. 0.3 above that shows the relative strength index is starting to decline, so we gave this one a yellow mark too. Overall, Polypore International looks like it's starting to lose a little bit of its strength here, so we'll have to see if we can survive again next week. And so El Paso Pipeline is out of here. And El Paso Pipeline looks like we're getting rid of some dead wood here. It was added to the portfolio on February 11th for $35.68. Opened the week here positive at $36.17, but we closed with a loss of $34.03. Total value of the portfolio, we had a loss of $117.70 this week, and a loss on the position too, on a sell. I had the stock for a long time here. We're getting rid of some good dead wood here, so it's been sandbagging us. Glad to get rid of El Paso Pipeline. Unfortunately, I think it's just a symptom of the real problem. The stocks look like they're heading lower. Let's take a look at the chart. And El Paso Pipeline showing no signs of improvement here down below. Stochastics continue negative, gave it a red mark. 0.2 above that shows the MACDs. This continuing to confirm the stochastics, and the histogram bars are dropping like a stone. We gave it a red mark. 0.3 up top shows the relative strength index. It's continuing in decline, gave that a red mark. You can see the gap down on Friday on high volume. Looks real bad for El Paso Pipeline going forward. Had one viewer write in, perhaps if we got better management we could turn a profit in El Paso Pipeline. Well, that viewer was wise. And we get a new stock in the portfolio this week. This week our new stock is... Jinko Solar. And Jinko Solar, symbol JKS, closed the week $28.50, has a market cap $679 million, average daily volume about 1.1 million shares. Jinko Solar is a Chinese manufacturer of silicon wafers, solar cells, and solar modules. Another Chinese company, go figure. Let's take a look at the chart. And the chart of Jinko Solar is looking pretty good. Down below, 0.1, the stochastics are reaching into overbought territory. They continue on higher. We gave it a green mark. 0.2 above that shows that the MACDs, they continue to ascend higher too, and the histogram bars are rising, so we gave that a green mark. And 0.3 above that, we can see that the relative strength index is reaching higher too, so we gave that a green mark. Overall, it's looking pretty good for JK Solar. Not so sure about the rest of the market. And so total performance in our holdings going into this week, we had Tempur Pedic coming in first place again this week, starting out $61.76. And Altera Corp came in second place this week, starting the week now at $48.15. Edwards Lifescience came in third place, $88.20 there. And Polypore survives the portfolio and knocks out El Paso Pipeline. Thank goodness. About time. Starting the week there, $67.62. And it's the new addition to the portfolio, Jinko Solar. Picked up 66 shares of that stock. Starting the week out, $28.50. We got cash now of $149.83 in the portfolio. Total portfolio value of $11,874.45. That's a small loss over last week, but again, we'll take it since things are looking like they're really starting to head downward. economic mechanics from this week, and we always begin with three key principles. And first, the U.S. dollar and commodities, they move in the opposite directions. And second, commodities and interest rates, they move in the same direction. And third, high interest rates, they're bearish for stocks. And we're going to use these correlations to analyze the evidence to find out where the market strengths are and where the weaknesses are. We're going to do that by analyzing the evidence. Let's start with the U.S. dollar. And as we look at the chart of the U.S. dollar, down below we see that 0.1, the stochastics, they're continuing to scream higher. We gave it a green mark. 0.2 above that shows that we're continuing confirmation with the MACDs as they're continuing to ascend much higher. And the histogram bars are climbing. We gave that a green mark. 0.3 above that shows the relative strength index is continuing to climb too. Looks good for the U.S. dollar here, at least on the daily chart. Let's take a look at the weekly chart. And the weekly chart of the U.S. dollar is looking real good here. Down below, 0.1 shows stochastics. They've been oversold for a long time. We've got a bullish signal. It looks like we're heading considerably higher. Gave it a green mark. 0.2 above that shows that we're about to get confirmation for the MACDs as the black line is getting ready to cross over the red. Histogram bars, they've continued to climb over zero too, so we gave that a green mark. 0.3 up top shows relative strength index bouncing very nice. Gave that a green mark too. Looks pretty good for the U.S. dollar. And so summing up the U.S. dollar, we analyzed daily charts and the weekly charts. On the daily charts, stochastics, the MACDs, and relative strength index, all positive, getting green marks. Over on a weekly chart, same thing, all positive, stochastics, MACDs, and relative strength. Overall, we had 0 red marks, 0 yellow marks, and 6 green marks for the U.S. dollar. And we take a look now at the commodities, represented by the CRB Index. And on the daily chart of the CRB Index, down below, 0.1 shows stochastics. They're oversold and continue to look negative. Got another sell signal. Gave that one a red mark. 0.2 above that shows the MACDs. No signs of recovery there. And the histogram bars, they're real negative. Gave that one a red mark too. Up top, 0.3 shows relative strength index. It is negative. Nowhere to go. It's looking negative. Gave it a red mark. And on the weekly chart of the commodities, doesn't look good at all. Down below, 0.1, the stochastics are in free fall. Got a sell signal, and they continue to drop. Gave it a red mark. 0.2 above that shows that we got confirmations. The MACDs, black line crossed over the red, and histogram bars fell below 0. Gave that one a red mark. And up top shows that we got the relative strength index dropping very sharp. Gave that one a red mark too. Doesn't look good for the commodities here. It's looking a lot like Paso Pipeline. And so summing up the commodities, we analyzed daily charts and the weekly charts. Not looking good at all. Over on the daily charts, stochastics, MACDs, relative strength index, all negative, all red marks. Over on the weekly chart, same thing, all negative, all red marks, for a total 6 red marks, 0 yellow marks, 0 green marks for the commodities. And we take a look now at the 10-year Treasury yield. And on the daily chart, the 10-year Treasury yield looks like we've been trying to recover a little bit here. Down below, 0.1 shows that the stochastics have been oversold for quite some time and look like they were trying to recover, but maybe flattening here. So we gave it a cautious yellow mark. 0.2 above that shows that we have yet to receive the confirmation in MACDs as the black line is looking like it wants to cross the red. And the histogram bars are still below 0, trying to climb higher. We gave this one the yellow mark too. 0.3 up on top shows relative strength index has been bouncing. However, on Friday we lost a little bit of steam there, so we gave this one a yellow mark too. And the weekly chart of the 10-year Treasury yield down below shows that we're heading lower. 0.1 shows stochastics. They continue to drop. We gave it a red mark. 0.2 above that shows we got confirmation, and they continue to fall, the MACDs, as the black line crossed over the red. And the histogram bars, the blue bars, continue to fall too, so we gave that a red mark. And 0.3 up top, relative strength index. It continues to trend lower. Gave that one a red mark too. That means money is flowing into the 10-year Treasury yields, and 10-year Treasuries are actually bullish, and the interest rates are going down. And summing up 10-year Treasury yield, we analyzed daily chart and the weekly chart. On the daily chart, stochastics, MACDs, and relative strength index. They were all neutral, and we gave them yellow marks. On the weekly chart, stochastics, MACDs, and relative strength, they were all negative. Gave them all red marks. For a total, got 3 red marks, 3 yellow marks, 0 green marks, 10-year Treasury yield. Let's take a look now at Dow Jones Industrial Average. And on the daily chart of the Dow Jones Industrial Average, down below point 0.1 shows we got another sell signal in the stochastics. Looks like we're headed lower. Gave it a red mark. And above that point 0.2 shows that we're continuing with the confirmation with the MACDs. And they're continuing lower too in the histogram bars. They're dropping. Gave it all a red mark. And up top, 0.3 shows relative strength index. It's looking weaker too. We gave that a red mark. Looks like we're heading lower on the daily charts. And over on the weekly chart, down below point 0.1 shows stochastics. They're beginning to drop. They're extended and overbought territory. Gave that one a red mark. And above that, 0.2 shows that the MACDs and the histogram bars, they both remain flat still. So we gave that a yellow mark. Up top, relative strength index. It's still trending higher, but it's losing a little bit of steam here. Gave it a yellow mark too. Overall, I think this one's going to start turning negative next week, as I think we're going to have a sell-off. And so, summing up, Dow Jones Industrial Average, analyze the daily charts and the weekly charts. Over on the daily charts, stochastics, the MACDs and relative strength index were all negative. Gave them all red marks. On the weekly chart, stochastics were negative, gave it a red mark. MACDs and relative strength index were still neutral, so we gave those yellow marks. For a total of Dow Jones, we had 4 red marks, 2 yellow marks, and 0 green marks. And so we've been coming up with scores for the US dollar, the commodities, 10-year Treasury yield, and Dow Jones Industrial Average. We've been coming up with these scores to determine where the strengths are and where the weaknesses lie. We did this by analyzing the number of positives versus the number of negatives and coming to a conclusion that way. This week, first place was clearly the US dollars. We had 6 green marks, 0 yellow marks, and 0 red marks. And in second place was the 10-year Treasury yield. We had 0 green marks, 3 yellow marks, and 3 red marks. And in third place this week, we had the Dow Jones Industrial Average slipping again. We had 0 green marks, 2 yellow marks, and 4 red marks. And in last place, and continuing the sell-off, we had the commodities, 0 green marks, 0 yellow marks, and 6 red marks. It's not looking good for the commodities right now, and you can really start to see the correlation here as the US dollar and commodities move in the opposite direction, and we got opposite scores. And we take a look now at the market gauge. The object here is to be as far in the right column in bullish territory as possible and as far away from the left in bearish territory as possible. And this week we had first place the US dollar. That was 6 green marks. We put that in the bullish column. And in second place we had 10-year Treasury yield. That's been creeping up a little bit here just on the daily chart. Still looks weak on the weekly charts though. That means money's flowing into the Treasuries right now. And the Dow Jones Industrial Average, it's been slipping the past 2 weeks and it's not looking good at all. It looks like we're going to be heading lower. Commodities, they just continue to get hammered as the dollar continues to rise. You can see that correlation very clearly as the dollar is in the far right column, commodities in the far left. And you can see too that the 10-year Treasury yield, that the money is flowing into the 10-year Treasuries as they are looking bullish right now, as money is starting to flow out of stocks and into the 10-year Treasuries. Also, we're coming to the end of QE2, as I've been reminding everybody each week. That means that the government's going to stop purchasing our 10-year Treasuries, all our Treasuries. So therefore, we're going to start to see the buying drying up there in the 10-year Treasury. So this is only temporary right now, as I think we're going to see a correction in the commodities. The 10-year Treasury is going to look bullish here, and God knows why. It's only the government manipulating once again. I expect a fall in the Dow this week. Things don't look good. Well, that's all from our show this week. Tune in again next week. We'll do it again. We'll have another complete market forecast. We'll take a look and see how we did this week. We'll also sell the worst performer in our IBD 50 portfolio. Every week, the worst stock gets sold and a new one gets introduced. But for now, I'm out of here.